It's your money and your money matters. For the best advice to help you succeed, turn to Gib and John. They know what you need to make the right financial decisions. Turn your radio on and listen to Gib and John. It's your money and your money matters. It's your money and your money matters.
I'm Gib McCarron.
I'm John Hardy.
Welcome to Money Matters Minute.
We're at the end of 2016. We've just
It seems like it's 2018.
Holy smokes. We just came through an election that truly the market didn't predict the outcome of.
And neither did many other people.
But strange things have happened since then. The market has gotten adjusted, and markets do what markets do. They look at the landscape, they look ahead, and they try to determine whether it's going to be pro or con, and so far they're thinking it's going to be pro.
Well, we have a campaigning Trump, and we have now a President-elect Trump, and markets again are trying to look forward and see what sectors, what types of investments might be in vogue, and what we're seeing is sort of a rotation from the dividend value-oriented assets into more growth-oriented assets.
If you look at now President-elect Trump, he's talking about certain things that the market likes to hear. He's talking about infrastructure, he's talking about energy, he's talking about jobs, he is talking about opportunities for all Americans. Now, that rhetoric is what the market wants to hear.
That's correct.
What will be the issue will be what will happen in the first 100 days, what will happen in the first year. Will the positive rhetoric and the positive talk for growth, for the economy, for America and for Americans, will it go from talk to results?
So with what we're looking ahead and trying to do is to also begin to move portfolios gradually towards a little bit more growth. In fact, we made some of those changes recently, not only in types of assets, but in the type of allocation from large to medium and small, and adding more into the medium and small areas.
We've been overweighted, as you know, in the last year. We're possibly even a little more in that value area, the areas that are paying dividends. We aren't necessarily moving more into equities as a bigger percent of our clients' portfolio. However, we'll talk a moment before we end about the cash and what we're doing about that. But we're allocating that piece that is the dividend paying piece to the sectors in which we've now talked and looked at as growth.
And as far as the cash is concerned, we did use some cash and purchase during the rally that we had after the election. And we're looking for other opportunities, especially in a dip that may occur in the near future.
So, I would say we are, as a firm, hopefully positive with what is being said and presented to the marketplace, and believe this has an ability to add maybe another leg onto a growth. Now, do you really think it's going to be a growth as the airplane takes off the runway and begins to climb immediately up, or are we still in this volatile market where we have dips and we have sways, but the rise is ultimately getting higher?
The answer is yes. I think we will have some opportunities in 17 that we might not have had because of the election. So we'll just have to wait and see if they do pan out over that first 100 days. But we're making steps and taking advantage of those things accordingly.
Well, there you have it, the end result of what we've seen from the campaign and the election. And now let's all go forward and look for opportunities as we continue to work hard each and every day on your behalf, because you know what? It is your money.
And your money matters.